collapse of Silicon Valley Bank.
The Silicon Valley Bank.
The Silicon Valley Bank.
SVB Financial Group.
A rough week for the banking industry.
The collapse of Silicon Valley Bank. The second biggest bank collapse in U.S. history.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business.
Governments are rushing to reassure citizens that their money is safe after the U.S. saw its biggest banking collapse since the global financial crisis.
From the Silicon Valley Bank collapse, the second biggest bank failure in U.S. history, and there are concerns about other regional banks too.
Silicon Valley Bank's collapse set off a panic.
Silicon Valley Bank's demise was closely followed by that of New York-based Signature Bank.
Some fears about a possible domino effect. Is there any word tonight on when people will be able to access their insured money?
I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank.
Today, we bring you a story that has rocked the financial world to its core. A story that has left many people on the edge of their seats and wondering how it could have happened. Silicon Valley Bank, one of the most respected and established institutions in the world of finance, has collapsed. It happened early on a Friday morning, March 10, 2023, after a shocking 48 hours that saw a bank run in a capital crisis that ultimately led to its downfall. The aftermath of this event will be felt for years to come. And many are left wondering how such a thing could have happened to a bank with such a strong reputation. But as we delve deeper into this story, we uncover a web of mystery and intrigue. Was there something sinister going on behind the scenes? Was this just a case of mismanagement? Or was there something more going on? Join us as we uncover the truth behind this shocking event and explore the twists and turns of one of the most dramatic financial stories of our time. This is a story you won't want to miss. Silicon Valley Bank, established in 1983, is a financial institution that focuses on offering banking services to technology startups and emerging growth companies. With its headquarters situated in Santa Clara, California, Silicon Valley Bank has expanded its reach globally, with branches located in several countries such as the United States, United Kingdom, China, and India. Silicon Valley Bank has emerged as a reliable source for technology startups and emerging growth companies, offering them financing, cash management, and various other services to support their growth and prosperity. In addition to this, the bank has established a trustworthy reputation as a partner to venture capital and private equity firms, rendering a diverse range of services that aid in managing their investments and providing support to their portfolio companies. Silicon Valley Bank has an extensive client base that comprises some of the most successful technology companies globally, such as Apple, Google, and Facebook, along with numerous potential startups and emerging growth companies. The bank has played a crucial role in the growth and development of many of these companies, offering them financial resources and expertise to elevate their businesses to new heights. Prior to its closure, Silicon Valley Bank was ranked as the 16th largest lender in the nation. Its collapse has significantly affected the technology industry, since it served as a significant financier of tech startups. As per the bank's website, almost half of the technology and healthcare companies in the United States that received initial funding from venture capital firms and went public last year were customers of Silicon Valley Bank. The Silicon Valley Bank's decline was a result of several factors, including poor management decisions, high-risk lending practices, and unforeseen market circumstances. The consequences of the bank's collapse were widespread and could have an impact on not only the bank but also its customers, employees, and the broader economy. One possible contributor to the bank's downfall was the Federal Reserve's aggressive interest rate hikes over the past year, which made it challenging for the bank to attract and retain customers. This, in turn, increased borrowing costs and funding costs, adding to the bank's financial challenges. During the time when the Federal Reserve's interest rates were low, banks invested heavily in long-term treasuries, which were considered low risk. However, with the Federal Reserve's increasing interest rates since 2022, the value of these assets declined considerably, resulting in banks facing unrealized losses. This has put banks in a vulnerable position as they have to absorb the loss, affecting their financial stability. The impact of the Silicon Valley Bank's collapse could have far-reaching implications, including job losses, reduced credit availability, and lowered consumer confidence. A report by Moody's indicates that the impact of high interest rates was mainly felt by tech startups. Due to the surge in interest rates, the market for initial public offerings became inaccessible for a lot of startups and made private fundraising more expensive. Consequently, some of Silicon Valley Bank's clients began withdrawing their funds to fulfill their liquidity requirements. As a result, Silicon Valley Bank had to search for options last week to fulfill its customers' withdrawals, which ultimately led to the selling of a $21 billion bond portfolio. Interest rate changes are just one of the many factors that can contribute to a financial institution's collapse, and other factors may have also played a role in the decline of Silicon Valley Bank. Let's take a look at how we got here. On March 8, 2023, the bank sold securities worth $21 billion and announced offerings of $1.25 billion in common stock and $500 million in convertible preferred shares. However, the bank faced $42 billion in deposit withdrawals on the same day, leading to concerns about its solvency. On March 9, the bank's shares plummeted by 41%, marking the most significant decline since 1998. This came after the bank sold all its available-for-sale securities and updated its forecast for the year, predicting a steeper decline in net interest income. Despite this, CEO Greg Becker urged clients to remain calm. The situation escalated on March 10, when several prominent venture capitalists advised their portfolio businesses to withdraw their money from Silicon Valley Bank. The bank's shares fell by 66% in pre-market trading and were on track to open at their lowest level in over 10 years. Later that day, California regulators closed the bank and appointed the Federal Deposit Insurance Corporation as the receiver. What's happening now? Y Combinator, a U.S. technology startup accelerator with investments in thousands of startups, has written to U.S. Treasury Secretary Janet Yellen and others, warning of further shockwaves that could lead to financial crisis and layoffs of over 100,000 workers. The accelerator has some level of exposure to the Silicon Valley Bank and has petitioned for relief and attention to the immediate critical impact on small businesses, startups, and their employees who are depositors at the bank. The petition, written by Gary Tan, has already been signed by over 1,200 CEOs and founders representing over 56,000 employees, and according to data from the National Venture Capital Association, SVB has over 37,000 small businesses with more than $250,000 in deposits each. Some of the companies that have deposits with Silicon Valley Bank: Sangamo Therapeutics has $34.4 million, Rocket Lab USA has $38 million in deposit accounts with SVB, Lending Club Corporation has $21 million, Payoneer Global Incorporated has less than $20 million held at SVB, Circle has $3.3 billion, Roku has one of the largest deposits at SVB, with $487 million. BlockFi has $227 million, Roblox Corp had $150 million of its $3 billion in cash and securities at SVB, Ginkgo Bio has $74 million, Irithm has $55 million. Other companies include Etsy, Shopify, and Pinterest. As of Sunday afternoon, topics related to the collapse of the bank, including SVB bankruptcy, has spread to multiple countries. President Joe Biden has emphasized that taxpayer funds will not be used to address the collapse of Silicon Valley Bank and its potential impact on small businesses and startups. Japanese policymakers on Tuesday played down the risk of the economy taking a hit from the collapse of U.S. lender Silicon Valley Bank, even as fears of a contagion hit financial stocks and sent domestic share prices tumbling. Regulators in Canada and Germany have decided to freeze Silicon Valley Bank's branches in their respective countries. Silicon Valley Bank's SVB collapse has caused widespread concern in China, and many founders and companies rushed to assure their investors that their exposure was insignificant or non-existent, while over 100 Indian startups have direct exposure to SVB. The ratings agency Moody's on Monday downgraded the debt ratings of collapsed New York-based Signature Bank into the junk territory, and added that it was also withdrawing future ratings for the bank. What's next? Amid the SVB collapse, Razer CEO Min Liang Tan suggested on Twitter that Twitter should buy SVB and become a digital bank. In response to Tan's tweet, Elon Musk, the CEO of Twitter, said that he was open to the idea. HSBC UK is acquiring Silicon Valley Bank UK Limited, SVB UK, for £1, HSBC said in a statement Monday. Royal Group, an investment firm from Abu Dhabi, may buy the UK arm of Silicon Valley Bank after it collapsed last week, and is currently discussing the possibility through one of its subsidiaries. Apollo Global Management Incorporated showed interest in snapping up a book held by Silicon Valley Bank, the California bank that was seized by federal regulators last week. Thank you for tuning in. As we await the fate of Silicon Valley Bank and its potential impact on small businesses and startups, we want to hear from you. What are your thoughts and predictions? Share them with us in the comments below, and don't forget to like and subscribe to join our community and stay updated on the latest news.